Good afternoon and good evening, everyone. Thank you for joining us virtually. I must say I'm disoriented, Henry, to be joining you physically, but thank you for hosting me, and thank you for everything that you're doing and MSCI is doing in leadership, and we're going to get into that in a moment. This is, we all know we're at New York Climate Action Week this week. I would say in many respects, this is the highlight for me of this week. This is an incredibly important initiative, and I want to salute all the founding members of both the Net Zero Financial Service Providers Alliance, or NZFSPA. I don't know how we're gonna anyways, and the Net Zero Investment Consultants Initiative. These are two critical elements, building blocks of the financial system, and we're going to have a chance over the course of the next 45 minutes or so to draw out some of the potential of these initiatives. But I just want to say a couple of words of context, and then we're going to have two panels, one focused primarily on the financial services side and the other focused on how companies can be helped in the transition to net zero. But I'll say just a couple of quick words of context. And the first is we are less than 40 days from the start of Glasgow COP26. At its core, this is a net zero COP. Core objective is to keep 1.5 degrees alive. So ambition from countries, companies, and the financial sector consistent with the enormous investment that's going to be required for the transformation and the transition to net zero. Absolutely mainstream finance. The good news is that in terms of the financial, the financial commitments, in terms of financial commitments, we are getting to an order of magnitude that is beginning to address the issue, that can address the issue. So the Glasgow Financial Alliance for Net Zero, major banks, asset owners, asset managers, pension funds, insurers, and others, responsible for balance sheets of $90 trillion US, committing to net zero, and not just 2050, but 2030 fair share, 5-year decarbonization targets. This is going to make an enormous difference to capital allocation, but they need the infrastructure, the plumbing, the advice, the data in order to do so, and that's why today's announcements and the work that will follow on it from it are so important. So bringing together 17 leading organizations, the world's 2 largest credit rating agencies, the 6 largest audit firms, leading index providers, largest financial data providers, and 2 of our leading global stock exchanges. And last word of context before we get into more of the substance. Obviously, these leading I shouldn't say obviously, but these leading institutions have made commitments and are delivering on net zero for their own operations, which is important and considerable. But what they're doing today is launching really a new approach to scope 3 operations, because their products, their services, their data are the building blocks for others to deliver net zero on their operations, whether they're in the financial sector or the corporate sector. And so providing the services that can help others make the transition. And we'll unpack that. A bit. So with that, why don't I start the first panel, and I'll ask John Haley to join us. I know he's here, and in this regard, we're gonna discuss how the service providers can help the financial services sector. And I'm thrilled, Henry, to be joined, well, I'm joining you actually in this case, in your offices. Obviously, Henry, the CEO of MSCI, the leading provider of indices and portfolio construction risk management tools, as well as ESG data and research. You pioneered things from work on applied temperature rise, climate VAR, other leading tools, but also just the core building blocks of the system, and we'll draw that out a bit more as we go forward. And John Haley, of course, CEO and Director of Willis Towers Watson, who've joined the Net Zero Investment Consultant Initiative. John's contributions to the transition and Willis Towers' contributions are many and varied, from your membership in the Net Zero Insurers Alliance to the the Coalition for Climate Resilient Infrastructure, also to your leadership on the GRI, the Global Resilience Index, which will be unveiled at COP26. So, and actually I've understated your contributions and Willis Towers' contributions, John, but time is of the essence, so we'll get into the essence of this. And Henry, I wonder if I can start with you, and actually I'm going to ask each of you the same question to start to draw this out. But the first is really, what is MSCI currently doing on net zero, and how does this announcement today, this new commitment today, shape the type of services that you'll be providing to the financial sector?
Well, Mark, first of all, thank you for joining us today in person in New York City in UN Week and Climate Change Week, which is amazing how we all of this can be coming together in this great city. Secondly, I cannot feel more honored to be with you today, and I want to embarrass you a little bit, but I think that when the history books get written of the survival of the planet in this century, there will be a special chapter allocated to the leadership and the role of Mark Carney throughout these decades, so we want to join you. We want to do everything we can to be able to effect change and change rapidly in this period that is in which the clock is ticking. So thank you for all of what you're doing for all of us, for our children, and for human race. No exaggeration, at all. This is a historic day because you are now rounding up all the different alliances that make up the fabric of the global financial system, from the asset owners, the asset managers, the banks, the insurance companies, and now obviously the service providers to that industry, either the providers of capital or the users of capital, including obviously the accounting entities and the accounting firms and the rating agencies that serve such a critical role. As you know more than anybody, we really facilitate the process of investing and the process of providing capital and using capital, across the whole world. And a lot of people think of that industry as the money industry, and that money may not be as important, in many parts of society, but it is the cornerstone of the free enterprise system in the allocation of capital from savings to productive investments to create economic growth, prosperity. So I think what we're embarking here, what we have embarked here in this climate change threat to the world, is a total transformation of the global economy and the total transformation of that industry. And therefore, the role of capital is paramount. And some people focus quite a lot on the role of energy and the role of technology. And therefore, the role of capital is not as pronounced as it should be. And that's what we're trying to achieve with you today here. We believe at MSCI that there is a massive capital allocation and the repricing of financial assets already taken place. And the good thing about Paris, the Paris Agreement, is that the world came together with a focus of 2050. The curse of the Paris Agreement is that it is 2050, and that the world thinks that they got 30 years, to achieve this. when in fact a lot needs to happen in the next 5 to 10 years that will then set the foundation for the back end of that period. And therefore, that capital allocation and repricing of assets is already happening. So the role of capital markets participant is paramount in that. Decarbonize portfolios, loan portfolios, investment portfolios, encourage companies to change their carbon emissions and come up with net zero pledges and detailed plans to do that, etc. Right? So we're very proud to be part of this. And in terms of what MSCI is doing, I think the first thing that I have mentioned to you before is we're putting our entire franchise of MSCI for the service of the global investment industry to achieve this transition. I cannot think of any other mission that a company like ours can have that is going to be more impactful and more of assistance to the whole world. So we do that from our indices. We're looking at every one of our indices and decarbonizing them and creating obviously parent aligned indices and all that. We're doing that with our risk models. So if you think about market risk in the world, obviously climate needs to be a major component of those models. We clearly are creating enormous amount of data and ratings and metrics of companies, of portfolios, of funds. And we're doing this in the public asset classes, public equity and public bonds. And we have started major initiatives to do this in the private capital markets, like private equity, private debt, private infrastructure, and all of that. Some of the things that, for example, that you have seen is clearly our climate value at risk models, our implied temperature rise models that we're going to be making public to companies, in the world. Our net zero tracker, we're taking our biggest index, which is about 10,000 companies, 99% market cap of the world, 50 countries, developed, emerging, large cap, mid cap, small cap. And we launched the first release of that report. We're going to be launching the second one coming up. And that report is going to shed light on every single public company in the world of any significance as to what their carbon emissions are, what their pledges are, and what transparency in their detailed plans should be. So that may not make us the most popular entity in the world, since we're going to be calling out the offenders and the ones that are doing their best. But it's a role that we take pretty seriously and we need to do. Lastly, I will say that it's good for us to point out what others need to do. The question is, how do you do that yourself? So we at MSCI Inc. have committed to net zero by 2040 or before, and we're working really hard to bring that forward significantly. We have a detailed plan, and that's the issue. You got to figure out how do you accelerate that in a detailed way, not just big announcements and pronouncements. And we're working with every one of our input suppliers and our distributors to achieve that with a lot of governance structure and the like. Lastly, also, the question is what individuals should do. So we have set up a process at MSCI to encourage each one of our employees in their own households, in their own efforts, to what is it that they're going to contribute to this. Again, it's a process in which we need to encourage everyone in society to try to achieve that. So we're very excited about what we're doing, but a lot of work needs to happen in a fairly fast pace.
Yeah, absolutely. And we'll come back to some of that. I'll say just one observation on two quick observations before turning to John. One, very important, the work on the private side as well. It's got to be all markets, it's got to be all capital, but as well the assessment of all the public companies. As you say, it may not make you that popular initially. However, one thing we know from implied temperature rise models and some of the work you've done is that the global capital markets on the whole say that we're headed to above 3 degrees. That's what we're financing. And that's not where we want to go as a world. That's we can't afford it in all senses of the word, but we need that level setting, and that where the base we're starting from where are the emissions, and then move forward. And it has to be comprehensive, and so this work is essential. John, may I turn to you, and I'm going to ask the same open question in terms of, you know, what Willis Towers Watson is currently doing, and how this will change your contribution. And I'll just say, by context, for some who might be watching who may underappreciate, and it's possible to underappreciate the roles of investment consultants, really the links between so many of the asset owners and the asset managers, how money is effectively put to work. So the significance of this initiative, you know, I don't think can be overstated. But John, I'll pass to you.
Thanks very much, Mark, and hello, Henry. It's great to be joining you this morning. Before I get into that, maybe I just say how much I agree with 3 points Henry made. One is, Mark, about your role and how history will look at how pivotal your role has been in this climate transition. Couldn't agree with that more. And also, Henry, with your point about the global, the important role of capital in this transition we have here. And then finally, about 2050. I mean, there's so many people that look at targets at 2050 and think that means we start in 2049. And the fact is those targets were at 2050 because we have to start work immediately right now to have some hope of reaching them. And that's something we just, I think, need to keep in mind all the time. So let me turn to Mark answering your specific question. So at Willis Towers Watson, we are an investment consultant. It's one of the things we do. And so that means that we bring together multiple asset owners and multiple asset managers, and looking to encourage innovation and to help create some new investment solutions. And in that role, you know, we feel we can play a crucial role in raising climate ambition for the financial sector, and facilitating the transition to a low carbon economy. So earlier this year, Willis Towers Watson made the net zero commitment for its own operations, which is its delegated business. So this is where we have discretionary advice for our client portfolios. And we joined the Net Zero Asset Manager initiative there. That discretionary advice piece of our business is about $168 billion. On Monday, we launched the Net Zero Investment Consultants Initiative, and that's going to extend to our non-discretionary advice. Now, our non-discretionary advice is over 20 times bigger. So we're talking $3.6 trillion of assets here that are now going to be involved in this. So let me touch on what we've been doing, and then what we are going to be doing new. What we have been doing is, since we first launched this initiative for our delegated portfolios, we're in the process of aligning every one of them to a net zero pathway. And we're helping our clients with their climate transition plans and their climate scenario planning. So for example, in the UK, half of our pension fund clients have already implemented carbon journey plans, and the other half are in the process of finalizing them. We've improved the both the depth and the breadth of our assessment of asset managers' climate competencies. And so this is one of the important things we bring as an investment consultant. We're going out, we're looking at these asset managers, we're assessing their competencies, and we now have a much higher minimum threshold for climate capabilities. And as we do this, and as we communicate this to the our investors, then of course that's going to be encouraging the managers to raise their game there. And we've already downgraded several and advised our clients to disinvest from multiple funds that we feel are lacking in client ambition. And again, we think this will get things moving in the right direction there. We have worked with asset managers to launch a number of climate-aware investment solutions, including the ESG Tilted Index in partnership with MSCI. Our global active equity solution has 65% lower carbon emissions than the index. our secure income solution that specifically targets environmentally friendly strategies, investments in renewable energy, electrification of transport, land reforestation, et cetera, has also been launched. We've increased our focus on engagement and stewardship, including better reporting frameworks, and of course, Henry talked about that, about using specialist engagement service providers, and we've joined a number of industry-wide initiatives. We're also working on improving our climate analytics. So that's forward-looking metrics such as our climate transition value at risk. And we have brought in specialist resources internally. We've actually made a number of acquisitions in the past couple of years, CPI, Acclimatize, which enhance our own ability to understand some climate issues, but then more important, we can reflect them in our advice to clients. So that's, Mark and Henry, that's a summary of what we have been doing. What are we going to be doing differently? What's changing after Monday's announcement? Two things that I think are fundamentally important. First, we're going to prioritize the real economy emissions reduction. So we're reflecting the interim target of 50% emissions reduction by 2030 or sooner. And again, this is the real economy as opposed to simple decarbonization of investment portfolios through exclusions and divestments with no real contribution towards the global transition to a low carbon economy. So that's important. The next thing is we're going to help, and I emphasize this, we're going to help all of our clients raise their level of client ambition and include net zero alignment in the way they invest. We're going to integrate net zero alignment in all of our investment consulting services in all the countries where we operate. And the reason I keep on emphasizing this all is the nature of the commitment with the race to zero and with the Global Financial Alliance for Net Zero. We're being asked for global commitments here. And we love the fact that these are global commitments. We love the fact that these are ones that touch on all of our services in all of our countries. We love the fact that the race to zero is really giving the credibility and trying to be the gold standard for the net zero commitments, and we're absolutely delighted to be a part of that. Just a couple of other quick points. We're going to invest in upskilling our consultants to enhance their specialist knowledge of climate change and net zero. And we're going to be reflecting this in the performance objectives of our senior leaders and investment consultants. We're also going to increase our engagement with asset managers and other service providers to develop new climate solutions to allow our clients to meet their net zero commitments. I talked about our what we've been doing on our evaluation of asset managers' climate competencies already, and how we've downgraded some of them and worked with others to change what they're doing. We're going to further strengthen that evaluation to ensure that the way they invest for our clients is aligned with a net zero pathway. And what we're going to do essentially is put even more emphasis on stewardship capabilities, as we think this is really the best mechanism to address the real economy initiatives. So we've partnered with PRI on this initiative, and we're going to develop a user-friendly reporting framework to report on our progress annually. Mark, Henry, a quick summary of what we're doing, and I hope you can tell we're as excited as can be about this.
Fantastic. Well, we've got a few more minutes, and both of you are doing so much. So I'm going to ask you both a tough question, which is, if you look at all the things that you're doing, and just a bit of a sense of what do you think will, as we sit here today, be most impactful for your clients through the system in terms of, and I'll start with you, Henry.
So Mark, I think it's education and how to. So the number one question that a lot of our clients ask in any one of these meetings is, tell me how much carbon my portfolio has, or tell me, the company says, what do I do? Where do I go from here? I think the number of participants in the capital markets that are unaware of this problem is fewer and fewer, and therefore we need to move towards metrics, understanding, and that education. And the second part is, how do I go about doing this? You know, what are the tools? What are the metrics? What is the path? What is the process to do that? And most people are at a loss on that, you know, because they don't have the things that John is talking about, right? You know, they don't have the capabilities. The thing also that I'm glad you mentioned, John, is that, you know, we all in the capital markets can, with our clients, beat up on companies, right? On you got to do this, you got to do that, you know, because of, if not, we're gonna withdraw capital, or else we're gonna engage in proxies and the like. But ultimately, the operating process is at the company level, and we cannot, you know, abstain from that. We need to provide tools and how-tos and roadmaps and all of that to those people. So those are the two things: more education about where we stand and where the trajectory is, and secondly, how do you help those entities get there in a nuts and bolts way?
Yeah, fantastic. John, same question.
Thanks very much, Mark. And so I would probably identify four things, but the first two are probably a lot more important. So the first one is raising the overall level of climate ambition. And considering our role in industry, as I said earlier, we work with many asset owners and many asset managers. And we're really in a great position to help facilitate the increase in the overall level of ambition that we see in the financial sector. And in particular, and this is why I emphasized earlier what Henry was saying about the role of capital, we can influence the way capital gets invested to align with the net zero pathway. And that's probably the single most impactful contribution we can make. The other one that I think is right up there, though, is targeting real economy emissions. And I mentioned that in my answer to the first question. This is the kind of thing that can only be achieved if everyone works together. And you know, GFANZ's objectives and what they're holding out, just as excited as can be about that. I think if we have the proper ambitions here and we have people working together, there's a lot that can be achieved. Two other things I would identify, though, are one is improving the net zero methodologies. And Mark, you know, from some of the things we've been working on before in other areas, but methodologies and metrics are absolutely vital in this area. And so the existing methodologies and metrics that we have are still in an early stage of development. There's a lot of them. They're inconsistent. Many don't exist, for example, for illiquid assets. So we want to be part of a group that are working collaboratively to develop and harmonize these methodologies. And actually, I should mention, as we develop these methodologies, one of the things we want to do is have as much of an open source, transparent framework as we possibly can. But forward-looking metrics that evaluate the success of carbon transition plans are of course particularly important, because what you can measure, you can manage. We can already see some real life examples of how an in-depth understanding of one's climate risk exposure leads people to positive action. And then the final one I just mentioned is improving regulatory frameworks. I think we can work as a group and as individual organizations with regulators and policymakers to help improve regulatory frameworks in which our clients operate to be conducive to their net zero ambitions. And, you know, improving regulatory frameworks sometimes means stopping people from doing things, but in other cases, it means actually freeing them up to do that. So I think there's an opportunity for a call for greater ambition from governments and policymakers around the world to lead the way in the net zero alignment, and we want to be a part of that.
If you don't mind, one other comment is, I think the other important consideration here is that we are all focused on the enormous risk associated with this, and therefore people get paralyzed sometimes. So we also have to focus on the enormous opportunities in the capital markets and in companies and the like that this represents. So if we motivate people by the opportunities, in addition to the awareness of risk, I think we're going to be in better position.
Yeah, hugely important. Thank you both. I can't do justice to your comments. Let's pick up on a couple as we segue to our second panel with Herry and Richard Herry Cho and Richard Mattison, but the point I just wanted to pick up on a couple of things. One is this element of open source and this core data that's open source, but then there's the expertise and the advice and the client value add that the service providers layer on top of that open source. We're getting the open source elements there, but then the extra value add that optimizes both risk management but seizing the opportunities. Second point, just reemphasize on regulatory frameworks, appropriate regulatory frameworks developing over time, partly for consistency, but also, as John said, to free up people to do things, and that's important in different environments. And the third point, which is segues perfectly to our next panel, is this is about real economy emissions reduction. That ultimately is the test, and both our colleagues emphasize that. And we are going to focus now in terms of net zero services for companies with Herry Cho, who's the head of sustainability and sustainable finance at the Singapore Stock Exchange, Dr. Richard Mattison, who is president of S&P Global Sustainable. And I'm going to start with you, Herry, if I may, and ask, you've made these commitments, you're joining, you're a founding member of the Financial Services Providers Alliance. The open-ended question, what does it mean for SGX?
Thanks, Mark. Well, let me just start with a bit of context for what it means in Asia. We all know that this is going to be the global engine of growth. It is today as well. So how Asia region takes on climate action collectively may make or break the global success, including at COP26. I personally live by the motto that sustainability is a journey, not a destination, yet time to take action is now. And nowhere else does this apply more than here in Asia Pacific. Now, Singapore being a regional financial and trading hub with really good legal infrastructure, for example, governance infrastructure, and strong commitment to green development and green finance already, that's a great backdrop. And for SGX, or Singapore Exchange, we're completely embracing that as a multi-asset and international exchange, with something like 40% of listed companies and 75% of listed bonds from being listed outside of Singapore. We do believe that we are ideally positioned to help marry, as you said, Mark, that real economy change that needs to happen here with the financial sector that's looking to drive things and very much so future looking in this topic. Now, as an exchange, we set a sustainability vision, and that is to be a leading sustainable and credible transition finance trade hub with end-to-end solutions, products, and the ecosystem. So our role is multiple-fold. There are a few lenses that we see things through, always with the ecosystem at the heart. We are also a company, so we've made our own ambitions. We've committed to 1.5 degree pathway in the midterm. So a 1.5 degree to 2030 and joint race to zero, of course, embedding not only climate, but broader green social solutions across the different multi-asset classes. And of course, we do have that regulatory function as well. So let me start on the ways that we've been looking to future-proof the market for some time. Because sometimes, even though it's not the most popular choice, if we really think about how to future-proof, help the companies in our market, what is the data that investors, since this is a global market, that investors are going to be seeking? And that became sustainability data. And so we are one of the first exchanges in the world to make sustainability reporting mandatory already 5 years ago, and to ensure there are certain key components, such as materiality analysis, board statement in particular, very, very powerful to ensure that the board has oversight on what's going on in the company around sustainability strategy, setting targets, and ensuring there's transparency on the policies and the standards that a company follows. Fast forward to today, we are now in a position, and we have an open consultation out right now to make TCFD mandatory. Of course, that's something, Mark, that you had a central role to play, as did SGX's colleague, Yolian Sim, who's been vice chair from the very beginning as a founding vice chair and still is vice chair today. So we continue to support the market in providing the key mandatorily information that we really feel would be critical to ensure that capital continues to flow to this part of the world. Tied together with that, as mentioned a few times already, is the importance of data. Data is exploding, but consistent, material, comparable data is of essence. And so we are looking at ways to help guide the market. For example, looking at what are the key material indicators that companies should be disclosing across ES and G factors to help speed up the disclosure requirements. Now, just on the final point about products, how do we embed sustainability into all of the product lines? It was already shared that indices will have a big role to play by Herry. Of course, we're not as big as MSCI when it comes to the indices business, but we do also have a line of indices that have a suite of climate impact focused consistent indices, which include a Paris-aligned benchmark compliant version. Much of this goes back to capacity building as well. So we produced a white paper as a guidance paper earlier this year on credible transition and decarbonization for companies and corporates in Asia, that ties in together science, in layman terms, how does science and Paris Agreement link to SDGs, and how does that link to carbon mitigation hierarchies, to when and how do you use carbon markets and carbon credits as a tool? How does that link to taxonomies and financing ultimately? And that was done with partners such as CBI, Climate Bonds Initiative, CDP, and law firm HFW. So perhaps capacity building and partnership is something I can focus on later.
Fantastic. Richard, before I turn to you, I want to bring in Sarah Wilson, CEO of Minerva Analytics. Sarah, apologies, you came in just after I caught the eye, because founding member, critical to this initiative. I want you to lay out your perspective on what this means for Minerva, your clients, and the system as a whole. And then Richard, I'll drop down to you if I may.
Thanks very much, Mark. Well, I think the important thing here to bear in mind is we're looking after asset owners. These are the people who are bearing the risk of companies who are not aligned with the net zero agenda. So for the past 6 years, we have been pivoting our business, providing stewardship support services to asset owners to embed sustainability and now net zero climate targets into all aspects of their stewardship, whether that is their proxy voting, whether it's research on companies, whether it's research on their asset managers. So we are absolutely delighted with our partners Selective to be participating in this initiative, because we really do believe that trustworthy data and solutions are the glue of financial markets. Nobody can make informed decisions without trustworthy data. So I'm actually very happy to sit between the indices and the stock exchanges, because we rely very much on corporations making high quality disclosures. And from next year, our clients will be starting to vote on whether or not they believe those climate transition plans are credible or not. So this is really a call to action for everybody to play their part. In terms of our own staff, over the last 18 months, they've been gradually introduced into sort of deeper learning about ESG, and we're aiming really to get to net zero by 2030 or before, if we can possibly do that. There is a shortage of knowledge and experience and understanding about net zero out there. So these initiatives play an absolutely critical part in raising awareness, particularly for asset owners, because those aren't just faceless individuals. They are ordinary citizens who are trusting their lifetime savings to the industry. We've had financial crises before. We do not want to have a planetary financial crisis as well, which is why we see what's happening in Glasgow, accounting standards, indices and benchmarks where people can pivot, but also the opportunity for asset owners to engage with companies, to explain to companies why they really need to hear this message. They've got to get in terms of what we're doing and what we have done already. Earlier this week with the Department of Work and Pensions, we released a report about the ability of asset owners to vote their shares according to their beliefs and their values. With Willis Towers Watson's asset management exchange platform, we've developed a module to enable asset owners to vote in pooled funds. And we're also doing work with the Financial Reporting Council on others on how the entire financial system can pivot towards the net zero future. So I'm delighted to be here and looking forward to the presentation from the accounting standards. Our research analysts are ready and waiting for companies to start making better disclosures. We've seen fantastic progress in the last 5 years, but there's still a lot to be done. Engagement, active voting and stewardship is critical, not just blunt divestment. We've got to get every company and the entire system on side with the net zero message. So thank you for letting me be here today.
Yeah, fantastic, Sarah. Thank you. Richard, I'll turn to you for S&P. I mean, it's a huge range of services you provide and infrastructure you provide data. Your perspective on what this means and where we go from here.
Yeah, thank you, Mark. Well, first of all, thank you for your leadership. I think I've personally been waiting for this day for a long time. I was one of the co-founders of Trucost, which is an S&P business 20 years ago. And this is definitely a momentous day that we have such a large collection of assets under management and also the industry that provides the critical infrastructure for investment decision-making all gathered together, committing to this pathway. So, I mean, from my perspective, we know that, you know, the capital markets are going to be critical in scaling investment and delivering sustainable outcomes, and that capital markets have a critical role in being part of the solution. But there is quite a long way to go, I would say. So according to our analysis, 77% of global companies have publicly disclosed carbon targets, but actually there's a 72% shortfall on those reduction commitments versus a net zero trajectory. So we do have quite a long way to go. We need to kind of make much more accelerated progress. And interestingly, I think that in this particular situation, we're in a bit of a long-sighted perspective right now, whereas markets are usually quite short-sighted. We have lots of information about 2050 goals and how the economy needs to be transformed by 2050. But to echo some of the points earlier, I think we actually need a lot more information about what the near-term short-sighted trajectory is and mid-term. And so we are committed to helping with that at S&P Global. We have 4 main divisions. So we are one of the world's largest index businesses with S&P Dow Jones Indices and the S&P 500. We have one of the largest data businesses in the world. We are the world's largest credit rating agency, and we also track a lot of the commodity markets with our Platts business. So we have a critical role to play, I would say, in ensuring that we accelerate the transition to zero and that we really have enough intelligence to navigate to that next signpost as to whether we're making progress. And so we are investing to do that, and we're really delighted to join this alliance today. We've actually assessed 99%, I should say, of market cap today and assessed its alignment with the Paris Agreement. We've been doing that for some time. And that's helped us build things like our Paris Aligned Climate Transition Index series, the PACT Index series. We've got 700 billion data points on the physical impacts of climate change, covering 7 main climate hazards going out over the next century. And we've mapped those hazards to over 3 million assets owned by 110,000 companies, which is going to be a critical data set to help, for example, asset managers and banks understand the risk perspective and drive the transition in the right direction. Our analysis would actually indicate 66% of the S&P 1200, the 1200 largest companies in the world, their assets are at very high risk of the physical impacts of climate change. We track 45 jurisdictions on carbon pricing policies. So, the transition may well have some speed bumps. And so we want to make sure that we do track how parts of the economy will be affected by different policies. And in particular, carbon pricing is one of those policies that we're keeping a very close eye on. And we've estimated that 13% of profit could be at risk if we have a strong trajectory on carbon pricing by 2025. And this will increase over time. So, in short, we're delivering intelligence to the market already on climate risks, climate change. We are committed to making more progress on that. We want to do more on modeling things like the impact of fuels and a transition in fossil fuel consumption to other types of modes, if you like, and other types of fuels. So we're modeling 30 different fuel types, including relatively new approaches. We're compiling our own perspectives on net zero scenarios, in addition to the scenarios that you might see from others in the marketplace. And we think that there are critical data sets that need to be put together on that. And we're very open to collaboration as well. We want to make sure that we are engaged and as collaborative as possible with the market. We want to make sure that, in particular, we engage companies in that transition. This is not going to be something that's achieved purely by the financial sector setting goals and forcing change. This is a two-way street, if not many more ways. And so we're very engaged through a number of different mechanisms with the marketplace right now. So we're really delighted to be here today with you, and delighted to be contributing to the progress.
Fantastic, Richard. And a couple of things. We have a few more minutes. I'm going to ask one last question, but want to salute you, personally on, co-founding TrueCost, really pioneering, and it's helped to catalyze, this broader initiative, which we now see mainstreaming. First point. Second, I think you can see from Henry, Herry, Sarah's, your comments, John's comments, just how broad this initiative is. Broad and deep. I mean, whether it's the data points are measured in billions, the applications in the hundreds of thousands, the whole of the public capital markets, different lenses. So this is hugely, hugely important, impactful. And of course, Herry, the SGX bringing in, it's a global exchange, but crucially bringing in Asia and the Asian transformation. So look, the question I'm going to ask each of you, and I'll go in reverse order. So Richard, I'm going to put you back up, and then Sarah, and then Herry, is, this fundamental issue, which is turning your activities, your contributions, your services into real decarbonization in the economy. So just for those who are, a step or two away from it, a sense of how this translates and how it will translate into that real decarbonization. Because in the end, that is the metric that we're all going to use is an effective transition to a net zero economy. So Richard first, please, and then Sarah.
Yeah, the transition is not going to say something fairly bold. This transition is not going to happen by ignoring fossil fuels. This transition is only going to happen by working together to make sure that we can make progress on transitioning away from the use of fossil fuels. We can't just ignore it. There's a real risk that if you do that, then someone else will just end up owning those assets in a private context. And so we need to be very proactive about this transition and very engaged with the right actors in this transition. And so from my perspective, this means that the finance sector needs to work with companies and governments to make that real economy change. And so how do we do that? Well, actually, we need to work together on things like data. We need to make sure that we have the right information to drive that change. No single actor has all the information, actually. That's the truth. And so we need to work together to make that happen. And so we're actually actively engaging thousands of companies to really make sure that we're getting the right information and that we're giving them the right information, and that they're really equipped with the right intelligence that we are also providing to the finance sector, so that we have a very transparent mode of operating and that we can make real economy change. I think that's critical. Secondly, some of the intelligence we have, we've generated using modeling techniques that aren't necessarily widely available to companies and governments. And so we're making those techniques available to those companies so that the intelligence that is put at the fingertips of our credit analysts is actually the same intelligence that is put at the fingertips of those responsible for business decision-making in companies. And I think that's actually critical to drive change so that everyone is operating from the same basis of information and making best use of the investments we're putting into play. And I think we need to continue to integrate all of that intelligence as best we can in all the different ways. And just to echo a lot of the other speakers' comments, I think this is about collaboration. This is making sure that we have the best mechanisms to make progress over time.
Fantastic. Thank you, Richard. Sarah, translating into real economy decarbonization.
Thanks. Well, as we all know, the economy, governments, it's all a very, very complex system, lots of moving parts. But for the ordinary saver, the ordinary person on the street who is trusting the financial system with their money for their future, this is about ensuring that they can retire in a safe world, that the returns are actually based on realistic net carbon transitions, holding companies to account rather than waiting for countries to introduce new guidance or new regulations on net zero is absolutely critical. As owners of companies and as providers of capital, shareholders, bondholders can have that dialogue directly with companies. We do not need to keep on waiting for a new regulation. People can take action today, hold their companies to account, encourage the ones who are doing really well to get that supply chain decarbonized, measuring what matters, as we've said, but also creating open and accessible standards for data interoperability, because none of us have got the single key to the solution of this particular puzzle, but we should be able to all work together to create the right solutions for investors who want to provide capital to generate the solutions. And that, I think, has just got to start happening right now. We can't wait any longer.
Fantastic. Okay. And Herry, from your perspective, from SGX's perspective.
Yeah. I mean, with the fact, indeed, this is a seismic shift in the world economic system that we're looking at. So we're all around the table here because every single, facet of every single actor on the planet needs to take action here. Yet at the same time, different regions do come with unique challenges. Transition, which used to be a word that really was not embraced very well, right? It is now globally embraced, and that understanding is indeed seeping through into Asia as well. But we do need to keep our ear and sort of, tentacles on the ground, because here in particular, the needs are not only about climate action. We would also have to take into context that there are other environmental objectives and other social objectives, ensuring that they happen at the same time whilst not slowing down the climate action that needs to happen. Key part of that, again, cannot emphasize enough, the knowledge building in each company, whether that be corporate, real economy, or the financier, absolutely critical, and we should not stop at sustainability teams. That's why one of the aspects that we are consulting on open consultation is actually making one-time directors, just a board of directors and company directors training on sustainability mandatory. And in order to ensure that the changes that are happening are captured as data that can be utilized to promote there be reports assurance, whether that be internal audit or external is up to the company as a start, but that is a very, very important point. And just on the capacity building, I mean, like we're targeting directors, there are these leverage points across the different parts. So, the senior members of the listcos, for example, or even those, the sell-side analysts, those that actually write the buy-sell-side signals for, company ratings and brokers, etc. These and media even, these are all components that we collectively have to train and where we are looking to put in systemic efforts. So yeah, I think it's something that we really must work closely as a private-public partnership between the financiers and companies, and really, really continue to have a feel on the ground and channel that back as part of that global discussion, but yet, fully understanding the needs of the holistic network.
Fantastic. And the hour has flown by, so thank you for everything you're doing. I can't properly summarize, but I just want to pick out a couple of key points, which is you've all emphasized that this is a decisive decade. I love the framing of sometimes the financial market is accused of being too short-sighted, but in this case, the danger is being too long-sighted, leaving it for another day. No, this is the decisive decade, and we know what the ultimate measurement is. The ultimate measurement is the success of decarbonization in the real economy, and it's getting capital to companies that need to put it to work in order to be part of the solution and seize the opportunities that come with that. It's managing the risks, obviously, but it is very much seizing those opportunities. And I'll just end in terms of you all emphasized, which I think is exceptionally powerful, the individual, building the capacity within individuals, educating employees, having ownership of this process as we go more broadly. And then as I think Sarah led with, this is ultimately people's money. It's everyday people's money. It gets aggregated up into bigger organizations and advised and optimized through the system, but it's their money, it's their financial future, and it's the future of their planet and their children and grandchildren's planet, and that's our collective responsibility. Very much looking forward to working with all of you through these alliances as part of GFANZ. And the very last word, this completes the waterfront for the financial system. We have the asset owners, the asset managers, the banks, the insurers, and the key service providers and investment consultants. So thank you for your leadership, and let's get to work. And thank you for hosting.
Absolutely. Pleasure to be here with you.